We also have Venugopal Garre, Head of Research India at Bernstein, joining in. Venugopal, thank you for joining in. So first, let's talk big picture. This is still keeping people at the edge of their seats. Your first thoughts on what we're seeing so far this morning, the market's positioning, and how the outcome, at least, is not exactly as per, what the poll predictions were.
Yeah, firstly, thanks for inviting me on an extremely interesting day for markets. So anything can happen through the day. So let's see, eventually what the outcome for NDA is. But I guess the first reaction clearly reflects the fact that a lot of it is, especially market levels that we are seeing, and of late we've been seeing, are a function of more a prediction of the level of win for India. So if you were to expect a 400 win, the market would have been at a different level versus, let's say, 270 or 280. Win was anyway something that nobody was questioning. It was all about the next level of the market, and that's largely depending on flow and the positioning that short-term money takes in, on such events. So what you're seeing right now is a pretty interesting situation where the exit polls per se created a new band or reinforced a band saying that 360 to 390 is going to be the range for NDA. And my contention was that irrespective of what happens, if you see the band being lower, even if it is 330, 340, you potentially see the market giving up something. And the reason being that if you were to just purely look at it, anything above 23,500, or if you touch somewhere close to 24,000, which we haven't until now, takes the market to a very different valuation trajectory, where you have to make a lot more, a different approach towards how we look at earnings or multiples, and that's anyway something would not have, held through. So profit booking anyway sort of emerged, even if on a pretty massive mandate. So it's an interesting situation right now, but we still don't know how things will pan out through the day. So let's see.
Okay, all right. Hi, Venu. Good morning and good to see you. And, I was reading a note and you were talking about at best, maybe we could scale 23,500. Now, if the mandate is not in favor, what are the levels you're looking at, in terms of a downside?
Look, the reality is this, that continuity of power in itself, in my view, is a good enough outcome to support the markets. So what I mean by this is that if you started this rally at about 22,000, which is when the market was 2.5 weeks back, we probably trend back to that. You're not going to go back to 21,000 or 20,000. Remember, this has been particularly a fairly decent backdrop of earnings growth, which we've seen last year. So that provides you that cushion in terms of where the markets head. Continuity of power also means, remember, that if we see 270 plus, 272 plus, the situation is that in the next 2 or 3 months, the narratives will shift. It will be about the 100-day agenda. It will be about budget, how the government is going to use the surpluses they got from RBI. So the entire narrative will shift away from whether you got 290 or 272 or 330. It is all going to be focusing on that. So I don't really see a too deep a correction as well in this scenario. But remember my broader thinking about market returns this year, which is that 8 to 10% odd doesn't really change. And that would not have changed even if they had got 380 seats.
Yeah, no, I get that. Samir is also with us. Venu, hi, good morning. Prashant here. Samir, you're watching the Bloomberg and you're also watching the television screen. Anything you want to add to what you're seeing?
I was saying that plus minus 3-4% from here, from last day, who knows exactly, but not plus minus 10%, you will move on in life.
Right.
Provided there is NDA government and provided there is no visible backing off in terms of the steps that were being taken. And I don't think anybody will make it visible that now I will not do this because I got less seats. Yeah. So after a few days, move on. And I disagree that there would normally be a correction. Please understand that in the last 2-3 years, none of the large caps have moved. Neither the financials, nor the consumer, not the IT. If you look at the earnings growth for the last 2 years, it's more or less exactly in line with the NSE 500 index, which is around 15-16% per annum. It was up 4% in 22 and up 25% in 23. And this year it's up some 5-6% in half a year. It is up less than 15% per annum in INR terms for the last 2.5 years, which is more or less in line with our earnings growth and our market growth for the last 5 and 10 years, which is in the mid-teens. So we can keep saying that this level is high, this level is not high. We have not had foreign investors come in this year. Normally, they are supposed to come in. Normally, they come in. They have come in 20 out of 24 years. The default for them is not to say whether I should buy or not buy. The default is to buy. And then sometimes they don't buy. And therefore, there will be a situation plus minus a few months where Indians are anyway buying because the 3-5% correction is not going to make them move out. And the foreign investors will come in. The rest of the world is doing well. This year, we have not done that well. Yesterday, we thought that the market is up 3.5%, but Korea, Taiwan, China were up to 2%. So let's not think that a correction was to be due anyway because the market has rallied a lot. According to me, market has been in fair territory. You cannot buy the market only when it is cheap. It can be also bought when it is normal. Which means you make earnings growth, you don't make re-rating returns.
Okay, that's a nice one. Market can be bought, not when they could be, but should be is the question, right? I mean, well, that's a good way, nice way to put it.
It is okay. No. Why should the market be only cheap for you to buy?
No, absolutely. I agree.
Okay?
Tell me, Sameer, okay so just to pick on
the earnings growth.
Just to pick on that one point, do you think financials are have got the maximum safety? I mean, if there is going to be some volatility, some pullback, I mean, financials perhaps have got...
Totally believe in that. Totally believe in the financials as the number one theme because IT, although it hasn't done well, also it's doing badly in terms of fundamentals. There are questions. They are not hiring people. They are not giving bonuses. They are telling you every morning they can come home and tell you over dinner. But they tell you on TV that it's a leaking bucket, that I have 15-day visibility. Still, all these stocks get recommended. Then on CNBC, I saw one of the biggest companies saying, I have 15-day visibility. And that evening, I saw the investors recommend that stock. So, and the consumer is more expensive for very ordinary growth. Therefore, financials are the best relatively. And also because they are known animals, the world knows about these companies and they are a large part of the index. So if and when, and there is no if according to me, but when foreign investors come in, whether they underweight, overweight, they have to buy some 30% in financials. Okay. And there are only a few stocks that they normally have.
Sure. All right, just one.
Venu is with us, but so is Sameer. Sameer wants to make, I think he wants to get on the phone with, his investors and the local guys here as well. But so, Sameer, you wanted to make a point. Go on.
But my guys, but anyway, I want to say one point before I go, that let us say that in the exit poll, the number had come out for NDA 295, which is what I can see on your screen. What would you think would have happened yesterday to the market or today or combined?
Nothing.
Nothing. Market would have been flat.
So that is what I'm saying. It would have been nothing plus minus 1% here or there, and that is where it will rest, and then we will move on. That is what I'm saying.
So you're saying with this,
if this number had come on Saturday,
right,
then yesterday's hyper and then today's reverse hyper would not have happened. You would have been saying, okay, they have won, but with a lower majority. But that is what normally happens in a third term, and there are some lessons here and some lessons there, and hope that as time goes on, there'll be some more consolidation and, maybe there is a market feedback or an economy feedback to the government. And so I would have moved on. Nobody would have been hyper.
But Sameer, the thing is, these are still leads. These are not final numbers. We must keep that in mind as well, right?
I agree. But assuming that these leads are going sort of at this rate, of course, if it falls, then of course it's a different game.
Sameer, we'll let you go for now because you want to, only because you want to, and we'll have you back in about an...
my guys and say, anybody getting hyper, I am not. That's why I've been hanging around here.
No, but please. This is what you're saying. If these numbers hold, kal ke number saaf ho gaye, kal ke gain saaf ho gaye, and this is it. Maybe a few percentage points more, maybe. But if these numbers hold,
you tell me. I am asking you. How do I know? I am just saying. If they had said in the exit polls 290, 300, who would have bothered?
Yeah.
It would have been neither plus nor minus. You would have said, chalo, big event out of the way.
Correct.
That's what.
Okay. Sameer will join us. Sameer will join us about an hour and a half when we have the firm tally. Thank you very much, Sameer, for staying with us for now. Venu is with us. Venugopal Garre, head of research at Bernstein. Venu, you've been listening into the conversation, looking at the numbers. Shirini has been telling us what's going on. Your thoughts, you heard Sameer as well. Would you kind of agree with that? That if the government is formed, That is essentially what matters. Beyond, of course, the intraday volatility, which is because of positioning as well, because people went long, so they would be, pairing of positions, etc. But beyond today, if the government is there and there is continuity, it should be okay.
No, I think broadly I agree with Sameer as far as the medium to long term is concerned. So continuity of power is a very critical requirement for all the thesis with respect to how you look at cycles, how you look at medium-term growth, how you look at investments, from both domestic and FIIs into India. So as long as you're coming into power, that's good enough. The question around if the number of seats, of course, are not as high as you anticipated, would that lead to a situation where you go a bit populist, get into a bit more of subsidies? I dismiss this idea because I think at all that has to be done, that can be done 2 years later, doesn't need to be done now. So I don't really see much of a change in flavor around what will happen post-election in terms of the broader agendas and policies of the government, right? So that is probably something which holds good. But on a very finer measure, look, what has been happening over the last 1 month is broadly trading, right? If these number of seats didn't matter, then we should not have seen the market also move anywhere, right? And my thinking is if exit polls had given you something like 290, 295, the market would have actually fallen yesterday materially. And then when you actually get 290, 295, the market would have actually been bit up today. So yesterday the market would have fallen. So that is a reality because people had in their minds that there will be at least 330, 340 seats for NDA. 360, 390 was something which was cemented earlier when the pre-polls sort of came in before phase 1, right? And 400 looked like a very tough act anyways, even at that point of time. So this is all trading going on right now in any case. I won't read too much into where we end the day, in terms of market.
All right, Venu, so you're basically saying that, going by that pop that we saw and now the flattening out, this event could be a non-event on the whole, provided there is continuity at the helm. Venu, the couple of themes that you've liked actually have been this Capex-related themes, manufacturing-related themes. Those were sectors that you liked in comparison to IT or consumption. Any changes out there now? Will you get a little bit skittish? Private Capex doesn't come back in a big way. Will that make you a little nervous?
See, Capex and manufacturing are the core agendas of this government, right? I don't think that is going to change. When you see the 100-day agenda as well, you are going to see a lot of tangible announcements around those areas. That's going to be given. And more importantly, irrespective of whichever government had come to power, Capex cycle basically is a cycle. It doesn't stop. So broadly over the next 3 years, you will see government Capex transferring and shifting towards private Capex. Now, private Capex is something which doesn't happen purely through policy. Of course, policy is required, but it is pretty much an organic capacity utilization factor. So capacity utilization will go up, economy does well, you tend to set up more capacities. So that is more an eventuality. It always tend to lag in any case in cycles like this. So broadly, I don't think this script is going to change. Now, the way we are positioned is, of course, the fact that, we have selective bottom-up picks within these areas. Because in general, this is a discovered space. So valuations are not necessarily as cheap as they were before. So people have been pricing in some part of the cycle. But there are some areas where we felt that, for example, financials, for example, where valuations are not necessarily that aggressive, where there is still decent growth. We are overweight sectors like those, right? So it's not like we are purely overweight a cyclical Capex play.